greed, fear, ignorance, and hope. These four aspects of human nature have never changed. Just as Jesse Livermore said a century ago, it is precisely because of these eternal human drives that numerical patterns and formations in the market keep repeating themselves over and over again. Hello everyone, welcome to Inventor Strategy Deep Analysis. Today we are bringing you a modern strategy that carries the legendary wisdom of Wall Street. In the trading world, there is an eternal paradox. Technology develops at lightning speed, but the human nature that drives markets has never changed. When markets surge, greed makes investors forget about risk. When markets crash, fear makes people sell everything. In uncertainty, ignorance clouds judgment. In despair, hope ignites again. This is the eternal truth that Jesse Livermore revealed in Reminiscences of a Stock Operator. Today's strategy transforms Livermore's deep understanding of how human nature drives market patterns into a modern quantitative tool that can automatically identify and trade these repeating patterns. Through precise state machine design, it captures the market psychology cycles that have not changed for over a century. This strategy's core innovation lies in modernizing Livermore's insights about human nature driving markets through mathematical modeling. It divides market behavior into 6 distinct states. Major uptrend and downtrend represent clear trend directions. Natural rebound and retracement handle normal corrections within trends. Secondary rebound and retracement deal with complex oscillating situations. The strategy's core wisdom shows up in 3 layers. First is the pivot distance mechanism, which quantifies price movement amplitude to judge whether collective psychology has reached a critical point. The major multiplier identifies significant reversals, while the minor multiplier captures daily fluctuations. Second is the double confirmation mechanism, which requires 2 consecutive state confirmations before executing trades. This effectively avoids single impulses and false breakout interference. Finally, there is the adaptive adjustment function. You can choose fixed thresholds to maintain consistency or enable ATR dynamic adjustment to follow the changing rhythm of market sentiment. The entire system abandons complex technical indicators, relying completely on raw price action information. Through the state machine's rigorous logic, it automatically captures those market patterns driven by human nature. This design maintains both Livermore's profound insights and the execution precision of modern quantitative trading. The strategy builds a complete trend identification system through 6 core parameters. Pivot distance percentage is the sensitivity master switch, controlling the strategy's reaction threshold to price fluctuations. Smaller values can capture subtle changes, but will increase noise interference. Major pivot multiplier is the judgment scale for significant reversals. When price movement reaches this multiplier, the strategy considers the market has undergone a qualitative change, rather than simple technical adjustment. Minor pivot multiplier handles fine identification of small-level fluctuations, defining the boundary line from short-term adjustments to trend continuation. The ATR switch decides between fixed or dynamic pivot distance calculation modes. ATR period determines the length of the strategy's market memory. Longer periods focus on historical volatility characteristics, while shorter periods are more sensitive to current changes. ATR multiplier controls the intensity of dynamic adjustment. It is the key parameter for the strategy to maintain stability in high volatility environments. These parameter inputs define the strategy's main control variables and can be flexibly adjusted according to different coins and trading styles. Here is the indicator definition section of the strategy. First, we continue with ATR value calculation. Then, based on the ATR switch, we calculate the pivot distance ratio. There are 2 working modes to choose from. Fixed percentage mode maintains uniform judgment standards under all market conditions, suitable for trading environments that pursue consistency. ATR dynamic mode automatically adjusts thresholds based on current market volatility intensity. During high volatility periods, it increases tolerance to avoid overtrading. During low volatility periods, it lowers thresholds to enhance sensitivity. This is more suitable for markets with dramatic volatility changes. Trend states use the 6 market state definitions from Jesse Livermore's theory. This includes the initial uncertain state, major uptrend and downtrend states, natural rebound and retracement states, and secondary rebound and retracement states. Each state has a dedicated integer identifier, forming the complete logical framework for strategy judgment. The core of signal generation lies in the state transition mechanism. The strategy tracks market dynamics by maintaining 4 key price anchor points. The highest and lowest points of major trends mark the boundaries of strong market movements. The extreme points of natural adjustments define the range of normal pullbacks. The ingenious design of the strategy lies in simultaneously maintaining state information across 3 time dimensions: current state, previous state, and the state before that. This historical record provides the judgment foundation for the double confirmation mechanism. Trend tracking variables record key price levels under various trend states, including the highest price in major uptrends, lowest price in major downtrends, highest price in natural rebounds, and lowest price in natural retracements. The variable initialization process sets reasonable extreme values as starting reference points for price tracking variables, ensuring accuracy in subsequent calculations. The strategy's state machine starts from the initial state, setting the starting trend through simple price direction judgment. When price rises, it sets to major uptrend. When price falls, it sets to major downtrend. Major states are the core of trends. When in major uptrend, if price continues making new highs or pullback amplitude does not exceed the major pivot threshold, it maintains the uptrend state. Only when pullback exceeds the threshold does it turn to natural retracement. Major downtrend state logic is completely opposite. This design ensures the strategy can identify and track clear trend directions while maintaining tolerance for small fluctuations. Natural states handle normal corrections within trends. During natural rebound, if price continues rising without breaking previous highs, small fluctuations maintain rebound state, while large fluctuations turn to major uptrend. If it breaks previous highs, it directly confirms major uptrend. If price falls, small pullbacks maintain rebound state. Breaking key levels turns to natural retracement, otherwise enters secondary retracement. Natural retracement logic is completely symmetrical. Secondary states, specifically, handle complex oscillations. When price stays within natural adjustment boundary ranges, it maintains secondary states. When breaking range boundaries, it converts to corresponding natural states. Through this hierarchical design, the entire state machine can accurately identify various market behaviors from major trends to subtle adjustments. The strategy execution section demonstrates the conservative wisdom of the double confirmation mechanism. Entry decisions require extremely strict conditions. First, we must detect that the trend state has changed. This condition ensures the strategy only considers trades during state transitions, avoiding repeated operations within the same state. Then we must have 2 consecutive periods confirming major uptrend. That means both current state and previous state must be sought up before executing a buy. This design filters out many false breakouts and tentative rises, ensuring entry only after the trend is truly established and stable. Exit logic is equally cautious. It also requires detecting state changes first, then confirming 2 consecutive major downtrends before closing positions. This avoids being incorrectly stopped out during short-term corrections. The strategy adheres to a pure long-only philosophy, completely avoiding short trading. This aligns with the slow bull characteristics of cryptocurrency markets. After each state change, the system automatically updates the state history record, providing accurate foundation data for the next round of judgment. This ensures proper functioning of the double confirmation mechanism and state change detection. This strategy shows clear environmental adaptability characteristics in quantitative trading practice. In one-sided bull or bear markets, the double confirmation mechanism can effectively filter false breakout signals, letting the algorithm enter only after real trends are established. This is crucial for automated trading systems. For mainstream coins, their better liquidity and relatively stable volatility characteristics make strategy parameter optimization easier. In quantitative live trading, we need to pay special attention to 2 key characteristics of this strategy. First is risk control. Since the strategy relies completely on trend judgment without traditional stop-loss mechanisms, we must control maximum risk exposure per trade through reasonable position management, avoiding excessive losses during wrong judgments. Second is the strategy's reaction characteristics. While the double confirmation mechanism effectively filters false signals, it also means the strategy reacts slower to rapid reversal situations. It is more suitable for capturing medium to long-term trend opportunities rather than short-term rapid fluctuations. From a technical implementation perspective, we can dynamically adjust pivot multipliers based on coin market cap size. Large cap coins are harder to manipulate, so we can use larger multipliers to filter noise. Small cap coins have higher price sensitivity, suitable for smaller multipliers to capture early signals. Additionally, Integrating key technical-level identification modules in quantitative systems can significantly improve strategy performance at critical nodes by automatically increasing strategy sensitivity when prices approach important support and resistance levels. From a comprehensive quantitative strategy perspective, this strategy shows decent theoretical foundation and practical value. Strategy completeness is quite solid. The 6-state machine design covers all possibilities of trend changes. The logic is self-consistent and easy to understand, which is important for stable quantitative system operation. However, risk management is indeed an obvious weakness. Lacking traditional stop-loss mechanisms and relying completely on trend judgment to control risk may face larger drawdowns in extreme market conditions. This needs special attention during live trading. Adaptability performance is satisfactory. Flexible adaptive adjustment allows the strategy to follow changes in market volatility characteristics. This design is valuable in high volatility markets like cryptocurrency. Understandability can be said to be this strategy's biggest advantage. Pure price action logic makes the strategy highly transparent. Even quantitative beginners can quickly grasp its core ideas. Innovation performance is good, successfully transforming century-old classic trading theory into modern quantitative strategy is valuable innovation, particularly modeling human nature-driven market behavior through state machines. This combination of theory and technology has strong innovative significance. Practicality varies greatly across different market environments. It is a powerful tool in trending markets, but less effective in ranging markets. Users need clear awareness of this characteristic. Overall, this is a distinctive trend-following strategy, suitable for experienced quantitative traders to use in appropriate market environments.